So today I'm going to be going over 5 very exciting fintech stocks listed right here on the ASX. Now guys, all of these stocks are super exciting because they're all pushing towards innovation and making things better in the finance world. And for me, since I'm working in the banking and financial services industry, I find this space super exciting. So for each company, I'm going to outline what they actually do, and then I'm going to talk about why you, the viewer, should care about this company if you want to invest in it. And also for each company, if you want to know more in depth about what they do, I've done a full video, a full analysis of each company, so go check it out. There's a link in the description as well. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, this video is not financial advice. I'm not a financial advisor. We're speaking in a very general sense only, so make sure to do your own research. I am literally just some random brown guy on the internet talking about stocks, so just keep that in mind, do some research as well. Let's get into the first company, which is DOU, ASX DOU. So a quick summary about DOU is that they're basically a smart bank account slash a financial wellness platform. And what do? Well, they do exactly that. They try to promote financial wellness, and they're doing that by taking a technology first approach by embedding AI and machine learning into their processes and products, and essentially partnering up with other companies to let them do the heavy lifting. So for example, DOU's ultimate goal is actually not to become a bank or a neobank, because as you guys might know, getting a banking license is quite a headache for these banks. It's quite a big challenge basically. So since it's such a pain, they don't want to go down that route, and they basically just want to use the banking license of other banks and other institutions and kind of partner up with them to use their infrastructure. Now at the moment, DOU is investing very heavily into investment jars and wealth jars to help you invest your money, and they've got algorithms that can track your spending and basically predict your expenses. They want to essentially put everything into autopilot, so all of your bank transfers into different accounts, into savings accounts. DOU believes that you shouldn't have to do this manually, it should just be done automatically, and that's what I really like about the company. So why should you give a damn about this company? Let's talk about it. Now personally, working in the financial services industry, I do believe that there's a bit of a gap in the market when it comes to financial wellness and just the normal everyday banks. Because if you look at the traditional banks and see what they offer, yes, they give you all the banking services like bank accounts, savings accounts, home loans, personal loans, credit cards, all that sort of stuff. These banks don't actually help you with financial wellness. They don't help you to build wealth. For example, they don't help you to invest or even encourage you to invest. And most of the ways how these traditional banks make money is through traditional debt products and interest. But on the other hand, you've got DOU, which is a financial wellness platform, which is giving you investment products, investment portfolios filled with stocks, ETFs, and even crypto. So DOU is basically looking forward into the future and really embracing crypto. Whereas if you compare it to the normal banks, they're a bit apprehensive when it comes to crypto, and this financial services model really helps customers to build wealth and encourages them to invest. Plus for millennials and Gen Z, I think DOU's targeted offering is very on point when it comes to this target market, and they recently launched in the US and they're showing signs of very fast growth. Next up we have Raise, ASX RZI. Now I'm sure you guys have heard about this one if you're just starting off with your investment journey. Raise is basically a micro investing app that essentially allows you to invest small amounts of money, and this is mostly aimed towards beginners, and they have a bunch of portfolios for you to choose from. So basically with Raise, you can get started with investing with as little as $5. So the barriers to entry are very, very little, but just keep in mind the costly monthly fee that they charge. And recently they've added a portfolio as well, which includes cryptocurrency, and that got a lot of people excited as well. So as a potential investor, why should you care? Let's have a look. Well, since the March crash last year, millennials and Gen Z especially have opened up a lot of accounts, and they've started to invest in the stock market a lot more frequently, and that crash basically gauged their interest quite a lot. And we've seen trends from a lot of brokers like CommSec and SelfWealth, and we've seen that during that March period, that March-April period, we saw the uplift in trades by quite a lot. So we obviously know that a lot of people are getting into it. Now, one of the barriers to investing and getting into this world of stocks and ETFs is the fact that people think that it's hard to get into, and they feel that they need to spend thousands of dollars to actually invest in the market. But Raise is coming out with this offering where they're giving you access, and they're really democratizing investing by giving you access with as little as $5. So essentially they're increasing the accessibility of this app. But the real reason why I think this company is good to look at is the fact that they are actually expanding very, very quickly in the Asian region. Now, this is the most recent report that I have for Raise in the month of March, and you guys can see that in countries like Indonesia and Malaysia, we can see that for some months there is double-digit growth month on month. So they're growing very quickly, and they're also planning to launch in other Asian countries as well moving forward this year to essentially keep on expanding and keep the growth continuing. Now, as you guys might know, with Asian countries, the population is many times the size of Australia, so it does present quite a big addressable market. So I do think this company is still worth looking into. Now guys, if you are considering getting into investing with micro investing apps like Raise and CommSec Pocket and Spaceship, I've done a separate video on these three apps. I've gone into the pros and cons and the fees and which one I think you should invest in. There should be a link in the description for that video, and there should be a link somewhere on the screen as well, so go check it out. Now the third stock on this list is Fyzee ASX WZR. So to put it simply, Fyzee is basically an online lending platform that basically gives personal loans to Australians, and these personal loans are referred to as being fair personal loans, which is fair to the customer in a sense that if the customer's credit rating is pretty good, then they will get a lower rate. If their credit rating is not that good, then they will get a higher rate. So this keeps it pretty fair for Aussies. Now, as you guys can see on the screen, an interesting value proposition that this company has is the fact that for people who have strong credit, their interest rates on personal loans are less than 5% when compared to the big four banks, which to me is very good to see that they're competing with the big dogs of the industry. Because if you think about it, in this super low environment, why would you want to pay more, right? So let's look into why you should care for this company as an investor. After all, aren't they just like any other personal loan company? What is so valuable about them? Well, as you'll see, similar to Do's offering when it comes to financial wellness, Fyzee is also taking the financial wellness route, and they're offering a lot of solutions to help Aussies get ahead on their finances. So firstly, this app allows people to see their credit score completely free of cost. And the good thing about this app is the fact that once people use it, they are added into Fyzee's sales funnel, and customers keep on using this app because they're getting access to a free credit score, and they like the fact that over time they can see their credit score increase. And also similar to Raise, this app also allows people to pay off their debt using the roundup feature. And when it comes to their customer rating, it's pretty high as well, much higher than the big four banks. And their fully digital offering is attracting a lot of Gen Z and millennials, and right now they are on a very slow path to $1 billion in loans. And the fact that for customers their good credit ratings are rewarded much higher than the big four banks, this makes it a huge value add for the customers to keep on coming back to Fyzee should they need personal loans again. Now before we go into the fourth company on this list, if you guys have found value so far, please leave a like and subscribe. It really does help out with the YouTube algorithm. I know that literally every YouTuber says this, but it really does help out. Now the fourth stock on this list is Tyro Payments, ASX TYR. So with Tyro, as you guys can see, they basically provide small to medium businesses with payments and banking solutions, especially to customers in hospitality, retail and health. And in terms of actual products, you can see that they provide customers with a bank account, business loan and FPOS machines as well. So why should you care about this company? Because at the moment they have a partnership with Bendigo Bank, which is actually the 5th largest bank in Australia. So they've got that strong backing, and at the moment 85% of their customers operate in hospitality, retail or health. So they've got that in-depth knowledge about that industry, and because of that they really tailored their solutions to fit those customers. Plus their FPOS solutions are really their main differentiating factor when it comes to their business, because they're actually the largest FPOS provider out of all the banks if you exclude the big four. So for small businesses, when it comes to their banking and lending needs, they've actually really lost the trust in the big four banks when it really comes to it, because as you would have seen with the Royal Commission and other complexities that big four banks often have when it comes to dealing with small businesses, Tyro is a fresh alternative, and this really helps to keep their small businesses moving, because as we know, small businesses are the backbone of any economy. Plus, back in December 2020, their NPS rating, or the Net Promoter Score rating, was really high. Now, this was before the whole FPOS connectivity issue happened, so we will see this NPS rating decline a little bit. However, if the company does not have any major issues like this happening again, we should start to see this NPS rating move up over time. And looking at the company's share price, we can also see that the market itself has moved on from that whole incident, because this issue happened around this mid to sort of early January time where we can see that the stock price fell by around 30%. But since then, the stock has regained momentum and it's gone up 70%. And if we zoom out of this graph, we can see that the stock is kind of leveling around that $4 mark, just under. So it does seem that the market has moved on since the incident. Now, the last and final stock on this list is EML Payments, ASX EML, and this company has 3 main divisions. So for EML, the first division is called General Purpose Reloadable, and this basically means that the company offers reloadable cards to other companies, which then give these cards to their customers, and this has worked out really well in industries like the betting industry and salary sacrifice and things like that. So as you can see on the screen, the companies themselves are then able to fully brand these cards and drive brand loyalty with their customers and so on. And then the second division of this company is all about providing gift cards to companies, and once again these companies can fully brand them and then sell them to their customers, which will again drive brand loyalty. And you can see some examples on the screen right here. And the third division of the company is VAN, which is virtual account numbers, which in a nutshell makes businesses and suppliers' jobs a lot easier. So why should you care about this company? Let's have a look. Now, right now, EML is actually the largest provider of shopping mall gift cards worldwide. So they're not just some small company operating in Australia, they've actually expanded globally and they continue to keep on growing. Now, this company was hit by COVID though, and their G&I division, or the gift cards division, was hit by COVID. Because as you can imagine, why would customers spend their gift cards when the shopping malls are in lockdown, so they couldn't really spend? But as more and more people get vaccinated and things start to open up around the world and in different countries and areas, and we start to move in a somewhat COVID normal situation, we should start to see an uplift in this division, which I believe will bring in a lot of revenue. And in the holiday period of Christmas 2021, we should start to see a big uplift in this G&I division and the gift cards division as compared to the Christmas 2020 period. So that should be pretty interesting to see. And given that this company operates in the US and Europe, which are 2 very huge markets for this company, and since they have quite a big international footprint, I think this company still has a lot of room to grow. Now, full disclosure guys, I'm going to be very transparent here and I'm going to say it. At the time of filming, I only hold those shares right now. I don't hold any other companies on this list, so make of that whatever you will, but just don't think of this as financial advice. Don't just buy into that company because I'm buying into it. Make sure to do your own research. Some of the companies on this list are not even profitable, so you really want to make sure you do your own due diligence. Now, for your pleasure, I've made a playlist of all the 5 companies that we discussed in this video right here, and each video contains a full summary of the company, its share price, its financials, a quick overview of the company, and my personal opinion on the stock. So it's very in-depth, so you can get some details and it can help you to do your own research. Thanks for watching guys. Please like and subscribe, and I'll see you in the next one. Bye now. And drive bland